Hello and welcome to another episode of the monthly market report. I promise you, we were not trying to put everyone in suspense. This was our third time doing this, and thank you to Alexis Garcia for coming in and bringing in the big guns to problem solve our issues. But thank you so much, everyone, for being patient. We're going to make it worth your while because, of course, we've got Jim Roppel, the creator of the Roppel Report, hedge fund manager, and all-around great guy, back on the show at September 15th, 2025. And welcome, Jim. How you doing?
Great to be here. I think we probably should short a little Google. I don't think this is operator error at all.
Yeah, well, it's hard to know if it was Google or probably our platform that we use. But anyway, we're here, we're live, we're going. So great to have everyone with us. And Jim, I just want to start out with saying, hey, last time you were on with Allie, and of course, those that are missing Allie, remember she is on maternity leave, so you're going to be stuck with me for a little while. Poor Jim. But we'll go right into where you were last week, because I think it's instructive that you were talking on the show with Allie about how you were ready to hedge. And just as a reminder for folks, that was about right here at this top at 21,803 for the NASDAQ. But I want to make sure that people understand you were saying hedge, not getting rid of your positions, because, again, you were right. We had this sideways action, came down below the 21-day moving average line a couple times, but here we are a month later, right back at new highs, and you still have a lot of your winning positions, right?
Yes, I was very fortunate. In the raging bull market, it was so good. The duration of the run and the level of extension over the 50-day inclined me to hedge. It worked out really well because now when I took the hedges off, I'm long what I think are several of the absolute true market leaders. I have preserved my cost basis and my tax seasoning. And it's been a huge problem for a lot of really super smart long-term winning traders or hedge fund managers, because they did get out of their names and now the market's come roaring back. And you only have one bear market created cup and handle generally. And so now it's been a lockout rally. People have sold when things were extreme, and now they have had a very difficult time getting back in. This has been my wheelhouse, man. Get in, get big, and sit for 4 to 6 beat and raise quarters, hopefully for that, life-changing TML run.
Well, and one of the things that was kind of tricky here, and I mean, I'm going to use the NASDAQ index here right now, the NASDAQ composite index, but we were trending so beautifully above the 21-day moving average line without hardly a test until August 1st. That was the first test, and certainly it was a pretty dramatic drop to the 21-day moving average line. But again, your first test, that certainly wasn't a moment to get the canned goods and go into the bunker.
Not at all. I mean, I think people were worried about seasonals, and they got very worried. We've got a large constituency of the market population, investors, who are overly worried, and you have to follow the trend. Seasonals are important, but that's not the dominant fundamental factor here. I mean, the golden goose has been working on triple overtime to bring us the biggest opportunity of our life. And, the fundamentals could not be any better. And the trend tells us that as well. I got to tell you, trends go much farther up and down than most people think. So, if you're a sitter, this has been your golden opportunity.
Yes. Now,
so far.
So far, right. And I'm just going to switch to the weekly chart real quick. I mean, the tight action that you're seeing here on the weekly chart for the NASDAQ is just absolutely remarkable. I mean, you couldn't really ask for much better than that. By the way, I can't remember who it was, but I did see in the comments, someone had 4 minutes as the over-under on when Golden Goose was going to be uttered by you, Jim. And it was 4 minutes, 22 seconds. So someone wins a prize there.
Take the under. Always take the under on Golden Goose.
Exactly.
No, over on expectations, but under on time.
Yeah. So we have this really tight action. But one of the things that I think is maybe concerning a lot of people is you look at the RSP, for instance, Invesco equal weighted S&P 500, and some people are saying, well, wait a minute, is this broad participation? It's tough because you look at RSP and it doesn't seem like it is, but then you look at the IBD 50, you look at all the new highs list, you look at all these areas, and it's like there are so many stocks to choose from. It's not a problem of finding things; it's a problem of not buying everything.
It's a problem with selectivity.
Yes. Mm-hmm.
I mean, like if you look at CLS, it's a 99 comp, 98 RS. But if you look at the numbers, they're nowhere near as good as a Credo or an A-Lab.
Mm-hmm.
So 99 comp, 98 RS is elite, but it's not the elite creme de la creme. And that's going to be the difference between, a 500% gainer and 1,000% gainer. And I know that sounds like hyperbole, but it's critical that you understand the history of TMLs and that
True
it's
market leaders. That's what TML stands for.
Common.
Mm-hmm.
I mean, Justin and I before this show were talking, and I said, this is so reminiscent of the internet build out. And I go, I think Cisco went up 32,000%. And I go, we're going to see another one out of this. And Justin said,
you're using the wrong number. It was 75,000% from its November 1990 breakout, a shakeout plus 3 or double bottom, whichever you use, until its March 2000 top at 82. Split adjusted, I can't even remember what it was, but it was like cents split adjusted on that breakout to 82 top.
But you have to expect that if this is the biggest revolution, innovation in human history, that we're going to see levels of extension greater than anything we've ever seen, price moves greater than we've ever seen. I mean, we are in an AI-induced economic boom driven by AI and analyst misunderstanding and mispricing of assets.
Mm-hmm. Okay, so this is a good point. You bring up analysts mispricing assets. If the analysts, the experts, the Ivy League college graduates, that their whole job is to get this right and they're getting it wrong, what hope do the rest of us mere mortals have here?
Way more hope, because they're all tangled up in their
valuations
models and valuation. And a very simple man can look at the new high list.
Yeah.
It doesn't take an Ivy League degree. It doesn't take a degree. Charlie Kirk didn't have a degree. Doesn't take a degree to change, to identify the leaders. I mean, that is the arbiter of truth, is the new high list and trend. And this is wallopingly bullish.
Yeah. And I will mention William O'Neill, the founder of Investors Business Daily, many times, confessed, yeah, I was kind of a C student, but, his approach was, well, I'm not going to listen to what everyone's telling me to do. I'm going to go look at what the best performers are doing and see if I can learn from them. And, that's why he started studying Jack Dreyfus, why he read the books of Jesse Livermore and Nicholas Darvis and, all of these, these heavyweights in terms of their success. And he's like, I'm going to do what they're doing, not what the analysts and the academics are saying the market should be doing. Because how many times has someone said this is what the market should do, and the market's just doing its own thing?
Analysts are in the business of keeping their job. And that means don't get caught in an earnings miss. So always be just a little below what you think. And look, when the Dow broke out a week or two ago, and then it retested, and then it moved higher. This is the beginning. Contrary to, we're well over 100 days off the April lows. Seasonals are terrible. This is the worst 2 weeks of the year. Russell is attempted to break out. It broke out not to all-time highs, but it did break out, and it violently broke out on like a 4% up day.
Which one?
Russell.
Oh, yeah. Okay.
I mean, this is not the end of a move. It's the beginning. This is how moves start. IWC, small cap.
Yeah. So this is the micro cap.
Yeah, micro cap. I mean, if you look at a weekly, it'll more clearly illustrate. Look at that breakout of this massive cup and handle. MAGs, has exploded higher. And you
And this is
said
the
breadth.
Magnificent Seven,
Yes.
so yeah, whether you look at mags or FNGS, there's just, yeah, it's just power, right?
Now
And
it's
that's despite things like Apple, and even Microsoft was kind of looking a little funny lately, but still these things are at highs and looking awesome.
see, I just think like talk about Microsoft. They laid off 19,000 people and the stock went up 40%. And then it did have a bad downside reversal in August 1st, roughly,
Hmm.
but it just came down subtly at an angle on a clock face at like 2 o'clock to the 50-day,
Right.
traded within a fairly reasonable expected range close to the 50-day. And now it's reasserting itself. It didn't blow up or plunge, it subtly digested. This looks great.
Hmm.
Um, Meta kind of softly pulled back. It broke out. It didn't rage higher and continue on, but it's trying to move out today.
Hmm. Yeah.
I mean, you said, you looked at RSP and you said, is it broad? Well, if you look at the percentage of stocks over the 150-day MA, it's enormous. It's actually, it looks almost extreme.
Right. And this is an important thing to mention. In your Roppel report, uh, you were almost apologetic that you had so many bullish indicators that you're like, this is crazy. How many things are bullish right now? It's almost like too good. Now, one thing I will say that's not bullish is the sentiment. You pulled out AAII. There's all of these things that are kind of strangely bearish, given that we're at highs. What do you make of that disconnect?
Well, when more people are bearish than bullish in the face of a raging bull like this, I've never seen this condition in 40 years. If I did, I didn't understand what I was looking at.
Hmm.
This just means we are super early. There's a constituency of people who, for political reasons, just can't believe we're going to move ahead. And they also could be looking at the employment numbers, which are
Yeah.
bad, non-farm payrolls. But if you're looking at jobless claims, they are at all-time lows.
Hmm.
Okay, so if you're kind of a traditional person and you're not following the trend, you're being left in the dust.
Right.
I mean, there's a lot of people who are trend followers and getting it right who are up 30, 40, 50, 100%
Hmm.
after this horror. And listen, we just had, I mean, Deep Seek, Black Swan Monday, and Tariff Mageddon is in the rearview mirror. That created a mini bear market. I
Hmm.
would never suspect that a new bull market is going to top 4 or 5 months after a bear.
Right.
It should go on. So let's just skip AI. In a normal cycle, it
Hmm.
would go on for 18 months to 3 years. Now you throw on the golden goose turbocharger of AI, which is completely, I think, largely misunderstood by most analysts. Most analysts don't know the potential of a TML. And what's more mispriced than anything is crypto. If you think analysts don't quite get AI, they have no clue about crypto. None.
Hmm. Okay, well, I'm glad you bring this up because some people were looking at this and it's like, well, gosh, what's wrong with Bitcoin? I'm pulling up IBIT, which I do have a position in this. I'm not brave enough to get the wallets and everything like that. I'm just like sure that I would lose it. So I do the ETFs. Maybe I'll just give my money to Jim. But yeah, so this was below its 50-day moving average line, below its 21-day moving average line. Nice pop up on Friday, so everyone's like saying, I knew it wasn't dead." And then you had today's action where it's like, you're not feeling as great. Ethereum, also, I do have a position in this as well, looking so strong on Friday, kind of giving most of it back, still, filling in the gap. And then also, you were talking about Solana. This is something that is kind of the one of the new kids on the block, relatively compared to IBIT and Ethereum, but phenomenal move on Friday, filling in the gap a little bit today.
So just for the record, there's never been a top in Bitcoin ever in any cycle without an altcoin rally.
Hmm.
I mean, altcoins are just barely subtly percolating. They're really not doing much. Solana is now the big cap leader. Um, But again, it's just NASDAQ filed to have tokenization. Real world assets are exploding. The reason Robinhood, one of the reasons is, besides the fact that they're the innovative Charles Schwab of our time, is that they're in tokenization. They're into real world assets. They're hitting the Gen Z and millennials. Like, this is their name, but they get crypto. This is just so early. Now, a lot of people are talking about the halvening cycle coming to its end. The difference is, in prior halvening cycles, we didn't have ETFs. We didn't have the institutional charge in. We didn't have the strategies, the not the ETFs, but like the strategies and the BM, whatever they are, the ETH, what am I called? Treasury companies.
Oh, gotcha. Okay.
The demand has supply demand ratios completely changed. And I just feel deeply strongly that we are going to go significantly higher. We are going to break the halvening cycle up. And that's why I think we're going higher.
You know what? Just while we're on the topic, I'm also going to bring up Irene here. This is one I was sharing on IBD Live this morning, how I bought this so great right here, and then sold it so poorly right on that downside reversal. And just that's not a mistake necessarily. The mistake was not getting back in it. But here we have an Australia-based Bitcoin miner. Now they've taken their operation and they've shifted a little bit more from the Bitcoin mining, saying, okay, that's maybe not as profitable as it used to be. And they're kind of using the same stuff for data center infrastructure. So you've got these things that are kind of tied together, so much computational power requiring for the mining. And now it's like, oh, what else could we do with this? Hello, AI. Let's just shift over here. So what do you think about that kind of movement and I guess flexibility that some of these companies are showing?
I think that for a very long time, I felt miners were too volatile and a bad business, but they've changed. And when they change, I have to change. Many, many mistakes will be made, and that's just fine as long as you change. I thought Google was done. I thought it was cooked by ChatGPT or AI, and all of a sudden, completely wrong. This stock was living well below the 200-day, and it's completely changed the pattern. I mean, having an opinion of I didn't like them to now I do, or I thought Google was toast and now it's engaged. I watched Bill change his opinion on Cisco multiple times, and it's wrong.
Or
I mean, the level of extension in IREN is just a symptom of the magnitude of the disruptive innovation we're seeing. I mean, do we look at STX or MW, the hard drive?
We did the first time around, but our audience hasn't seen that discussion. So yeah, let's go ahead and go there because we were having a great discussion on this that no one saw. Seagate Technology, STX, the memory side of things, as you were saying, just severely mispriced. The analysts got it wrong, and now it's a big game of catch up. So whether you're looking at STX, Seagate, or WDC, I actually had Seagate and I shifted to Western Digital, and then I'm like, I keep on going back and forth. Am I in the right lane? And then you also brought up SanDisk, an old name from the 90s that came back and is back with us. So go ahead and talk a little bit about this group.
Well, it was misunderstood. It was mispriced. And very recently, there's been a revelation that hard drives are integral to the AI build out. And if you look at SanDisk, I thought it was a laggard. But if you go to the weekly, you can see that the volume signature was telling you that something was cooking, even though the earnings were spotty. You have a wall of blue volume skyscrapers in there. And it's just because it was mispriced and misunderstood. And the volatility, the violence of the breakout told you it's okay to override and go after it. Now, I didn't, Eve, my associate, did in my other hedge fund. But if this was after a 6-month, 9-month, 2-year run, I'd call it a climax top. But I don't. I believe this is a flagpole.
Context matters, right? Totally. Climax runs are after, and this is again back to a rule of Bill O'Neill's. You don't even look for it in the first 18 weeks from an initial base.
This is 3 weeks.
2, right? Yeah. I also we had George Kachuk on the IBD Live show last week, and one of the things we were pointing out in the same group is Micron technology, MU, which again it was like, well, gosh, WDC and STX, they've been moving. Is Micron late to the party? But this is kind of a different element. It's not the hard drives so much as the chips and the storage that is going on in the chips that all of these people are using as well. So what's your take on this? Or is this something that you're watching as well?
I love the weekly. I wrote about it in the Roppel Report. I everything we've discussed, I've written about in the Roppel
Yeah,
Report.
I know.
Anyway,
Yes.
the the cup and handle to me was very Malcolm Gladwell Blink, looking really great. And you
Hmm.
had a shake in the handle, more blue, and then the breakup. But I don't believe it is the one.
Hmm.
Okay, the one is to me, it's Nvidia or Avago. I think of Nvidia, by the way, has been kind of forgotten. I mean,
Yeah.
it was all the rage
Hmm.
3 months ago, 4 months ago, and 2 years ago. But lately, it's acted very well. It's just digested a tiny bit. And I want to tell you something. This is what's totally misunderstood. I'm skipping ahead. By the way, if this makes a new high, I think it could just go wild. It looks
Hmm.
the fundamentals are so darn good. But the big misunderstood story is the the connectivity, the networking of GPU clusters. All
Hmm.
right. Blackwell takes it from 8 GPUs to 72, and they all have to be connected.
Hmm.
Okay. So the connection companies, Credo, ALAB, are the new Cisco's. All right. And I know they're small, well, relatively small. They're kind of low, mid cap names, but that's exactly what the market cap was of Cisco when it in its second run.
Hmm.
Don't be shocked if the name that's going to go up 32,000% in the next 10, 15 years is we're looking right at it.
Right.
Okay. Um,
And
but it's
I do need to disclose I have a position in Astera Labs. I had a position in Credo, and here again, this is one of those where I think I sold as it crossed below the 21-day moving average line and missed the opportunity to get right back in. I was like, oh, earnings are around the corner, and now I'm on the outside looking in. So shame on me. I was reading some of your notes, Jim, and I think you were talking about one of the cardinal sins is getting shaken out of one of these leaders. I think this was from the Gospel of Jim or something that I was reading that in. So yeah, the problem is again you've already named I feel like 10 phenomenal stocks, and here again it's like okay, there's a very big difference as you mentioned between Credo
and
and the numbers that are
CLS.
just nuts here.
Look at these.
Yeah. Yeah,
I
so I
mean,
mean, maybe talk a little bit about the magic elixir for those that have watched the
okay.
show for a while and are familiar with Jim. You've got what you call the magic elixir, but just to make sure everyone understands what that is, why don't you go ahead and explain it?
It's I think the really great no, this is a hyper growth name and it is fairly liquid, but institutions are looking for uber liquidity, something like a Dash.
Hmm.
The magic elixir is a combination of crazy high liquidity and sky high earnings estimates. Look at that. 751% estimates with average daily volume that is absurd. Like any institution can pile into this name. This is what institutions crave because a lot of them can't take a big position in Credo, although Credo's pretty good. But another one no one's talking about is TKO. And it's like, oh, it's MMA, it's entertainment, but
Hmm.
average daily volume is fantastic here. And they're only expecting earnings to go from 2 cents last year to $1.60 this year, which I'm fairly confident will be light to be followed up by another 107% next year. You have to think like an institution. When you're running billions, Credo is difficult. This is easy. I was talking to another hedge fund manager, well respected, and we were talking about some names. And he's like, well, we were talking about the breakout in Russell, and we're talking about that. And he's like, we said, are we going to buy small and mid cap names? He's like, it's so much easier to buy NVIDIA.
Yeah.
I can go buy 100,000 shares. It won't flinch. You can't monkey around with these little, if you're a big hedge fund, even an intermediate sized hedge fund, you have to buy the futures or an ETF. You cannot buy little names, individual names. Liquidity times sky high earnings is the magic elixir that institutions crave. It's You're almost always going to find the PE. If one stock trades $20 billion average daily volume and one trades 400 million, and they both have 30% earnings estimates, the one with the more liquidity is going to have a double PE ratio because institutions can't get involved in these other names. You can't get the support out of these smaller names that you're going to get with these bigger names and the liquidity. I killed Credo. We have to review it. Can we go back, please?
Yeah, absolutely.
Why is it a 99 comp name? It has triple digit sales, triple digit earnings, margins expanding. It's A plus group. Every single variable is perfect. Insiders hold 13%. Even the volume in the last 4 or 5 days has been digesting quietly. What if that's a mini little flagpole there? And so few people understand the multiplication of 8 GPU clusters to 72 that must be networked. It's completely lost on most people. This is a revolution in innovation, and these guys are, and A Lab's right there with them.
Yeah. So another one, again, I do have a position, but this is one where you do have this, really strong triple digit growth. I mean, some of these are coming off of, 9 cents to 33 cents, but you look at, forward estimates for the rest of this year, 94%, 29%. That's no slouch either. And it's got the chart action behind it. Now, I will say, just to kind of go back in time a little bit, because again, I'm just going to share my mistakes here. I had bought this, I think, 3 times. I think I bought it here. I think I bought it here, and and each time I got shaken out because it's like, oh, it's not ready yet. It's not ready yet. And then this was the one I missed, and that's the one that goes. And so I did get the position, but it was, I think it was in here on this upside reversal. So, I'm at a very different position in terms of my cost basis than the, the areas that I got shaken out of initially. So with some of these, again, for people that maybe didn't believe it at first or didn't understand the story and they're playing a little bit of catch up, I feel like it's easier to get shaken out of some of these names. But what's your advice when you get one of these and you do get some cushion, how to handle it from there?
You absolutely must grab bench this close to a bear market bottom in an AI disruptive innovation cycle. And if you guys have questions on how to get into these names when they're extended, you've missed it, tomorrow night, or no, Wednesday night on the Roppel Report, I will go answer all your questions in detail about how to get into these things now. And if you want a subscription, massive discount with the bundle, use code IBD for a significant discount. And I'm going to discuss this, A-Lab, BE, everything. But look at how tight this thing is, not giving anything back after its breakout over 200. It's just sitting up high tight. That's beautiful action. And the volume's digesting. I mean, my opinion of, the revolution from 8 GPUs to 72, you can throw that out the window. The stock's telling you that it's accurate. I mean, the price action and volume action is the final arbiter. And these things tend to go on for an average of 94.3 weeks. We just got rolling here. And a lot of people are like, well, we're going to have a correction, a digestion, probably before year end, that's going to be between 5 and 8, maybe 10%. It's extremely high probability. But that is not a signal to assume a bear market started. Right. You should assume that we're going to have a normal, actually a turbo normal cycle in time and magnitude. So when we have the first normal pullback, treat it as if it is going to be a buying opportunity, not a new bear, which a new bear is not impossible, but it's unlikely. You have to
just based on history, right?
Yes.
You're talking about history here. So
if you guys don't get O'Neill's book and look at the first 50 or 100 pages of all these charts, that's what you should be expecting. Okay. I don't take 20% gains on massive revolutionary TMLs 3-4 months out of a bear market. Okay.
Yeah.
That sounds ridiculous to me. You're going to look at the newspaper on New Year's Day and they're going to have the best performing stocks for the year. And you're going to, well, I was in 3/4 of the names and I made $5 on each one. But
Yeah.
the life changer you were in, you vomited up in some pullback or gave it up on a 20% advance. That's
Yeah.
crazy talk.
And to your point, this is something that you say often. Almost as much as golden goose of capitalism is, hey, you got to have the 4 to 6 quarters beat and raise. That's what's getting you that kind of life changer type situation. The leveling up potential.
You want to go from first class to private jet, you need to catch 5 TMLs through 4 to 6 beat and raise quarters with a meaningful 15, 18, 20% position, and your life has changed. Your retirement is locked up. We're talking about all this AI, but we haven't talked about the bottleneck. And the bottleneck is energy.
Yeah.
And I think, oh yeah, there we go.
Well, I mean, even before we get here, I'm sure you saw nuclear today. This is NLR, the Van Eck Uranium and Nuclear ETF. You basically had anything associated with nuclear, whether it's CEG, CCJ, LEU, UUU, the quadruple use. I mean, this whole area was going crazy. And then you've got your GEV, VRT, VST. Where do you want to start? And here again, it's but it's like there's so much to choose from. It's like who do you go with? Because and again, you see a day like today in nuclear, and it's like, oh, this seems good. This seems good. It's a kid in a candy store, and it's hard to stick with something because, oh, look, shiny over there.
Okay, with what you just said, do you think this market is narrow or broad?
Right. Yeah. When you can name off 10 in a group or in just like an area, it's really hard to call it narrow, despite what the RSP is saying,
And they're all varying degrees of greatness.
Mm-hmm.
Okay. Are you in the top 10 people of your class or are you cum laude? Okay. But the one we didn't discuss is BE.
Oh, yeah.
Because it has something that none of these others have. Well, first of all, I'll just say it. It's 25% short against the float. And that's because people did not believe the value players, the gloom and doomers, the naysayers didn't believe fuel cells were real. So they shorted the heck out of this thing. It was not making money. I hate stocks that don't make money, but now they are, and they have monster estimates. Management holds a big position. There's 200 million shares in the float, and 25% are short. So now you have,
and just so people know how they can calculate that, if you just take the short interest, which this is updated twice a month, this comes from the exchanges. You take the 3.8 days multiplied by this huge 11 million of average volume, and that gets you, okay, let's just call it around 40 million, around there. So with that 40 million, now you say, okay, how much is that as a percentage of the float? And that's where you're getting your 20% number.
Okay, so you're correct on your numbers. I have different numbers that show actually the short interest went up, but we don't have to debate that. Look at the wall of blue. Look at it's a giant flagpole. They're profitable. They signed a massive contract with Oracle. You think that that's the only company that's going to come to them?
Right.
Or do you think there's more contracts coming? Now, if you've ever been involved in a short squeeze, you understand that levels of extension for 50-day moving averages don't matter that much because when shorts get trapped, they're forced to cover, which runs the price, which causes more shorts to lose money, and they cover. You have a 99 comp, 99 RS name, wall of blue, skyscrapers, number one group. These shorts are trapped. So do not be shocked if when it blows off, if there is a squeeze, when it pops, it's going to be brutal. So this is a tricky balance, but do not be shocked if actually almost every single name we've discussed by New Year's Eve is radically higher even after some type of intermediate or a pullback along the way. We're almost certainly going to have a pullback before New Year's Eve.
Yeah. And just to be clear, I want to make sure people understand this negative 12%, that's referring to the days. So that's not actually saying it's maybe a little bit tricky here. That's not actually saying that the short interest went down, because what you see here is the volume went up. So you changed one of the numbers, right? You changed the number of your shares, and so yes, it's fewer days of average volume, but your overall number can still be much larger. So yeah, I'm glad you pointed that out, that it's like the number went up, because this sometimes can be misunderstood. It's not.
Actually, you're right. I quoted the wrong number.
Mhm. but again, with it very well could have gone up. The number is based on that and on that volume. So okay, now you look at something like this.
Call on me. Call on me.
Okay.
Can you hit monthly, please?
Yes.
Look at that massive 6-year base.
Yeah.
That was all the disbelief. Fuel cells aren't real. Institutional due diligence phase, and the shorts were piling in on this thing, and they got caught. It turned profitable. They were asleep, and now they're getting squeezed.
Mm-hmm. So, okay, now look, it's gone from 30 to over 60. So it's doubled in a couple months here. And look, you can look at this and say, oh, look, I've got some tight action for 1 week, or 1 day, I guess.
1 day.
1 week on Monday. So again, how do you get into something that's life-changing if you didn't recognize it at the start? Because it's certainly, if you got in here, you were fine, but then what are you doing? A pullback to the 10-day? Like it just didn't let you get in.
This is a subjectivity call, because you have to weigh total addressable market with a squeeze. Sometimes when you get a life-changing opportunity, the greater opportunity demands greater risk taking. Mm-hmm. So on 2 weeks tight, now again, I generally don't do that. I hate short digestion. The longer and tighter a digestion, the bigger the position I can start. My answer is you should have been getting the Roppel Report all year long.
Right, there you go.
I don't know. Yeah. I will also say, I actually have sold in the money calls on this for this Friday's expiration, just because it may not blow off, and it may, the 50-day is going to catch up with this at some point, or the 10-week. So I hedge almost anything that gets extended by over historical norms. I play for the downside. I'm always protecting, but I only sold in the money calls on about 20% of my position. So I am playing for the blow off, but I'm also dampening the downside. Mm-hmm. And I have been, as much as people ridiculed me on X, I've been wildly under bullish. The golden goose didn't talk to me enough in my ear and tell me to be more bullish.
Right.
Because as bullish as I was, it's wildly exceeded expectations.
Yeah. Mm-hmm.
And what would you expect when you have a pro-business president, deregulation, AI, the Fed is cutting rates into a market that is 1% off all-time high. We've got the most pro-business presidential cabinet in history. I mean, the economy is strong. The consumer, look at UAL. Do you think the consumer is struggling right now when a consumer airline, non-cargo airline is basically now I don't like this, and I hate the variables. There's so many of the 6 variables that control airlines, you can't control any of them. But yeah, this is telling you see a cup and handle, and it's not the most beautiful, and I wouldn't buy it, but the consumer's healthy. Look at Walmart.
Yeah.
Please. I mean, does that say recession? Mm-hmm. But people are like, well, we had an inverted yield curve, and employment numbers are terrible. They're not looking at the best indicator, and that's the new high list. That's the leading stocks. How people are not getting this, and bearishness, there's more bears than bulls, and the bears rose. How is that possible? What do they look? Well, I told you what they're looking at.
um, well, and okay, so let's talk a little bit about the Fed, because I'm trying to remember if it was in the Roppel report that you were giving a statistic about the frequency in which cuts are happening so close to highs. Was that in the Roper report, or was I
Yes,
reading that somewhere? Okay,
it was in there.
so I want to make sure I was giving credit where credit was due. Yeah, it's a very unusual situation, right? It was, what did you say, nine? You know, 9 times historically, going back to '94, which there was a major kind of cycle there with the Fed. But a lot of people looking at the 10-year Treasury yield. When we had that. Um, not Jackson Hole, the jobs report, a big move down as the jobs report came in softer than expected. The chances of a rate hike went from pretty much a lock on quarter percent rate cut to, oh, now we got to open up the possibility of a 50 basis point because of what that jobs number said. Now the inflation numbers, the PPI, CPI came in kind of like in line, but we've got this kind of push and pull, I guess. On the one hand, yes, we've got the Fed cutting and looking like they're going to cut maybe 3 times into the end of the year. Usually, you think of cutting as something that you're doing to stimulate the economy. And to your point, it's only been 9 times in the past where you've had the market at all-time highs and cuts are happening. Like, why is a stimulus needed right now?
Because the Fed, his their dual mandate has been changed. The
Yeah.
dual mandate is no more recessions are allowed and unemployment is not allowed to happen.
Mhm.
And this is a once in a lifetime opportunity. I think that because AI is so deflationary that the Fed can cut and run the economy hot, and we're not going to get inflation. This is uber. The golden goose has brought us deflation.
Mhm.
The unemployment is going to go higher, and the market is going to go to Pluto, and value investors and people looking at fundamentals of jobs are going to lose their minds, and they're going to not make money, and trend followers are going to crush it. This administration, if they get it right, may be able to pay down the debt massively, keep them, and the market is going to go wild. I think this is a absolutely virtuous brew of a perfect storm Goldilocks situation. And at this point, the new high list validates my opinion.
Mhm.
But I want to say one other thing. I've been very, very worried since quantitative easing started in Europe that it was going to end terribly, and it caused me, because I was geopolitically focused, that the market, we're going to have a calamity, and all of a sudden gold's been raging.
I was just, when you said Goldilocks, I'm like, oh, you say Goldilocks, and I think gold. Like, just
It,
I'm I'm right there with you on the gold part.
it's the number one sector this year.
Hmm.
At the same time, the dollar's imploding. Not imploding, but it is in a downtrend.
Hmm.
Now, normally I would say, oh my gosh, that is a recipe for a problem. But the arbiter of this that is keeping me bullish is the yield on the 30-year. The Fed can control short rates, but they cannot control the 30-year. And last Friday, we had a big break in rates, and it not just was in short rates, it was in long rates. If we see a continued rally in gold and a breakdown in the dollar, and all of a sudden the uncontrollable part of the yield curve goes higher, and that's the 30-year, everything's off. All bets are. You ask me what could go wrong if the current administration combined with the Treasury and the Fed doesn't get this right, and the debt gets out of control. The biggest worry I have, that's my biggest worry.
Hmm.
So if you start to see the yield in the 30-year start to rage higher and the dollar go lower and gold go like violently higher, that's signaling a major, major problem. And you should be selling equities broadly. And I mean, batten down the hatches.
Hmm.
But until the 30-year changes, everything's chill.
Hmm. Okay, well, hey, that's a good recipe of what to look for. But yeah, to your point, right now, gold coming out of this, nice tight consolidation here. GDX, the gold miners, and I mean the new highs list is, I mean, it's filled with gold names. You look at what was the one that was today? Orla. Orla was the breakout today. But gold, silver, gems. The group is number 4 out of 197. Um, you know, it's so unusual. And I'm just going to go ahead and add back to kind of that conversation about the things that you wouldn't expect to be doing well. Utilities. Of course, it's to your point about the bottleneck in power. Um, but some of these areas that you typically don't expect to do well in a raging bull, I mean, they're right there with the growth names, the FFTY, for instance. It's just kind of not what you would normally expect.
40 years ago, I used to sell utilities and utility bonds to widows and orphans because it was
Mhm.
so stable and dependable. They would grow at 2% a year. But times have changed, and utilities are now growing earnings radically higher. Alternative energy sources are ramping earnings and sales. You know what? I've said it 100 times. The new high list is the gold bar list that tells you where to be. And it can tell you how a complete diametric change in an industry, a tectonic shift in an industry is taking place.
Mhm. Yeah. And again, we're going through some of the groups that have a lot of them. Your GE Vernovas and the power, your gold, your AI, your chips, and everything like that. But again, you scroll down that list, and there are um, a lot of diverse areas that are featured there. Strangely enough, I mean, even aerospace. What was it? The level 3 Harris, that was breaking out today. Uh, KTOS, breaking out today. So again, it's not just one area; it's many. It seems like.
Can we talk about the double whammy of leading sectors combined in one name, Palantir?
Okay, yeah. Right. You got your software enterprise, you've got defense, you've got
Boom.
AI, you've got I mean, it's like creating rainbows. Now, granted, a lot of people were concerned. I mean, wasn't there a report out about how widely overvalued
That's right.
Palantir was? And all these contracts are not worth nearly what you think they are. And here we go, test of the 50-day moving average line, just hugged it, and now we're bouncing from there. And what's your take on this now?
Okay. No stock, no matter how uniquely rare gem 99 comp, 99 relative strength is it going to lead the whole way for a whole bull cycle?
Hmm.
They have to digest. And this is normal. Now, Citron called it, I think, the most overvalued company in history.
Hmm.
I put up next to this chart about 3 Roppel reports ago. I put the Barron's cover where they said at 11 that Facebook was the most overvalued company in the world.
Hmm.
Valuation does not matter in bull trends. In
Hmm.
bear trends, it means everything. But
Right.
right now, it's about possibilities. You have one of the most charismatic leaders, one of the most intelligent people in the world after Elon Musk, bold people. This is a defense contractor, which is changing the face of war, AI, massive earnings, sales. It's everything. And what did it do? It came down to the 50-day and then held super tight all over it. Now, also, one Friday ago, it broke the 50 with multiple other stocks, and people lost their they panicked,
Hmm.
but it didn't break it, and it didn't break it by very much. Bill would tell me if it holds within 3 to 4 5% of the 50-day or 10-week or gets tight below it, it's still fine. I mean, look at the volume drying up as it was getting elongated and the average daily range was compressing. I mean, this is
Hmm.
just another powerhouse. I think after NVIDIA, this is probably the key liquid leader
Hmm.
in the whole market. And again, its chatter has gone cold on this as well, which is exactly, let me get this. The average daily volume range or average daily range compresses, it's holding the 50 and people stop talking about it. And then it starts to rise back up off the 50-day. This is really what I'm very happy to see.
Yeah. A couple areas outside of AI that have kind of caught caught people's attention. I mean, there's always that leisure space, right? People love their free time and entertain me, and let's do fun stuff. NetEase, in the gaming, I mean, that was kind of a really strong move last week that it came out of. Roblox,
Boom.
I do have a position in Roblox. This one surprised me. I bought this one here and held it, through this whole thing. And if you had asked me at the time, did I think this was going to be the easiest hold in the world? I had no idea, what I had. It just wasn't doing anything wrong. So it was kind of I lucked into it kind of thing. But um, there's also, I mean, Netflix, that's gotten a little bit tricky below the 50-day moving average line. Spotify, that we were kind of watching a little bit, also just basing. But what do you think of the leisure space here?
I think it is almost every single cycle has a leisure related stock involved. And Roblox, I bought it the day you bought it. Um, it got to an excessive level of extension historically, and I started hedging, and
Hmm.
then it just kept going up in my face.
Hmm.
And I was only short about 30 to 40% of my whole position. When it had that blow off up there, I let them take my stock.
Yeah, I
Um,
I was selling into that, and then I think I sold the rest as it broke the 21 day, but I started buying it back, as this stuff was going on. So
if you understand the social aspect of this, the online social community, the average daily users, again, I loathe and detest, like the Grinch who stole Christmas. I detest, loathe, and hate entirely stocks with no earnings. But
uh-huh.
I think every cycle is not every. I would allow one of my 5 or 6 or 7 names to have no earnings.
Hmm.
But when we do have a bear market, the no earnings names get crushed exponentially harder. But and everyone goes, oh, what about Amazon? It had no earnings for a decade or more, decades. Do you know how
Yeah.
rare that is? I hate to say this. I love Roblox, and I would absolutely think it's a star. But if you want to avoid total disasters, stay with 99 comp names that are profitable, and you'll reduce the gap down disasters massively. Most stocks that are not profitable will never become profitable and end up going to zero. So anyway,
Hmm.
I do love Roblox.
Hmm. Also kind of in the retail space, but computer software enterprise, this has been kind of one of those uh, favorites, because everyone remembers this huge move, and it was kind of left for dead after a while. But Shopify, this thing is almost at all-time highs. What do you think of the base here on Shopify? It doesn't have quite those triple digit numbers, but it's decent. It's been growing, and there's a certain you know I don't know, this earnings line has just been phenomenal in terms of this turnaround.
Look at the market cap.
Hmm.
Okay. Now let's go to the daily and look at the gap up on earnings. They had a massive earnings beat. And what did it do? It did exactly what Oracle is starting to do. And people started second guessing it, saying, "Oh, it's a failure. It's not going to work." Oracle they announced they have a 5-year backlog.
Hmm.
Shopify didn't have spectacular blowout like that, but it did. Like, see, Oracle's giving back. And I generally don't like to see that. It's not ideal, but it's not deceased. It's nowhere near toast. And if you go back to Shopify, I think for a more conservative, non triple high octane golden goose investor, this is really a great idea. It's broader. It's a turnaround from they had an earnings problem a couple of years ago. It's totally in gear, um, and it looks great. And you have a pivot just a few points higher. An early pivot probably
Hmm.
runs the 1657 handles, and then it probably will. We're in such a bull trend. I just think everything's going to break out higher.
Right. Well, and then there again, that gets back to the problem of, it feels like there's so much to choose from in so many different areas. But as you said, it gets back down to, okay, well, if you've got something that has triple digit earnings and sales versus double digit earnings and sales, hey, you've got something to kind of act as your tiebreaker if you need it.
you got it. Bill would say, look, Jim, you cannot have your whole account in triple high octane names, or when
Right.
the inevitable digestion occurs, you're not, and if you're, God forbid, you're on margin, you're never going to be able to withstand it. You need some bedrock. Gold fit the bill. And by the way, for my whole career, gold stocks have been called junk and they weren't really profitable. They're almost all 99 comp names now. Okay, they're earning gobs of money. They're real. So a bedrock of some gold names, an entertainment name, coupled with some high octane, gives you bigger upside, but some base foundation of security or stability or lack of volatility.
Mhm. Yeah, absolutely. You know what? I also want to just mention again, kind of back to the breadth idea. Um, if you don't mind, let's talk a little bit about international. And sure, a little bit slower, but when you look at VXUS, which is the Vanguard Total International Stock Index, ex-US, so this is not including US stocks. Um, I mean, again, here we are at highs. What do you think about the international side of things?
I think AI is going to change every company that implements in the world. This is a global phenomena. Um,
Mhm.
you look at the Israeli stock exchange, it's at an all-time new high. You look at Poland, Romania, they're all at highs. But here's the thing, this wave has just started. It's not just US companies that are going to benefit. But one of my friends is one of the top salespeople at Oracle. He calls
Mhm.
on Fortune 500 and he's like, Jim, most of these companies are not ready to implement yet. They're not there. They don't understand it. They're just poking around on it. This is going to take a decade or more to be factored into the market. I mean, again, that presentation I did for you guys, whatever, on the internet, I said, when did the internet start? Was it when Netflix went public? When AOL went public? We
I
probably
think you mean Netscape.
Netscape. What did I
Yeah,
say?
Netflix.
Oh, sorry.
The wrong
I'm,
net.
my Alzheimer's is hitting me hard.
Yeah. Uh,
Um, when Oracle, do you think we just figured out like most of the use cases for the internet? That's a 30-year cycle.
yeah.
We're not gonna implement, build, monetize, and find all the uses for AI in 3 years or
Mhm.
5 or 10. Think about the first time you heard the word cloud computing.
Right.
1999. It was like, what's cloud computing? And then Oracle says we have to exponentially ramp our cloud business.
Mhm.
That's 24 years ago.
Yeah.
Cloud is ramping still. You think that AI is going to be adopted any quicker? This is the beginning, the very, 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 very beginning.
Yeah. Well, and just for, for those that, of course, not everyone was there at that presentation that you gave, but it was really interesting because you were making these analogies, like, okay, remember, back in the 90s, with the internet, you had the infrastructure part, you didn't know who the winner was going to be. You didn't know that AOL or whatever, but, it started with some of that connectivity, the boring stuff, like, what was it, Ascend Communications? Oh,
Oh
we're
my
just
God.
doing switches. We're just doing switches. So you can get that, lame tone, you're like, whatever. To start, the handshake between things. You had the modems, you had, again, Cisco was about the connectivity, the network connectivity. And, now all those use cases that you mentioned, I mean, just think about what mobile did, when the iPhone and everything else came out, you know, 10 it's almost 10 years after the dot-com bubble, and now we're still coming up with new use cases for that. And it's also worth mentioning that, like, Microsoft, for those that don't remember, it topped in 2000, and it was cloud computing that got it back to highs. It was not the old business that did it. So
They
um
pivoted.
yeah, they pivoted, and then now they're pivoting again to AI. It was this is kind of the third act, right? So
So Microsoft changed like utilities changed.
mhm.
But I want to say it's very critical to understand. And I get this because I was like at ground zero for the internet build out. I was at Morgan Stanley and I was heavily involved in syndicate or IPOs. the bulk of these names are going to go to zero. We're going to have an IPO boom. I think in 1999 there was 274 IPOs that year. I think this year we're somewhere around like 30 or 50 or something. We're so far from the frothy IPO bubble. But
well, and even in 2021, I think it's worth mentioning how that was getting up there in terms of the number of IPOs and the special purpose acquisition companies, the
yeah,
SPACs. You had hundreds of SPACs. The SPACs outnumbered the IPOs by a wide margin, and of course, that didn't end great with the 2022, but we're kind of seeing that pipeline come up. Are there any that are getting your attention? I'm going to let you finish.
I just want to finish this before we go there.
Yeah.
There's going to be many cycles through this wave of innovation, just like there was in the internet, and most of the names are going to go to zero. And most of the IPOs will never earn money. They'll be in Ask Jeeves and a .com drugstore, whatever. Most of these names are junk. Okay. There's very few that are elite, 99 comp names. So stay with those, stay with the new highs. Don't try to go, Credo's leading, but there's this kind of pseudo Credo one. Yeah, it's not even going to come close. Okay, stay with the leaders. And most of these names are going to top on the real elite ones will top in climax runs. And most of the secondary names will go to zero. There's only going to be 2 Cisco, NVIDIA like opportunities.
Yeah. And a few, I'm just going to go through a few recent IPOs. Certainly on the digital currency side, Circle got a lot of attention, came busting out. That's pulled back. More recently, you have what is it? FIGR, Figure Tech. Just 2 days out, 3 days out here. But here again, now we're doing digital assets and this combination of the consumer credit. So CoreWeave, caught a lot of attention, and then of course Klarna as a recent IPO. Now one of the things we were discussing on the IBD Live show this morning was IPOs feel different than they did. It's gone from a raising money to cashing out. And case in point, Klarna, by the way, I'm not sure if you saw this on Business Insider, the lockup period, non-existent for employees. They are allowed to sell immediately. That was a report from Business Insider that just basically said, hey, we're waiving the lockup period. You employees cash out, whenever you want. So there is a little bit of this difference in terms of the pipeline, because now the venture capital and the funding, these are coming out as like mature companies.
They're staying private.
Yeah.
And that's over-regulation. A lot of that's over-regulation.
Okay.
But I'll tell you, my crypto hedge fund has 3 of those. It has Circle. It has, oh my gosh, what did you say? The 3 names.
So there's the
FIGR.
FIGR.
It has Figure. It has Circle. It has
CoreWeave.
Figure. Doesn't have CoreWeave. I bought all these in private placements years ago.
Oh, okay. Gotcha.
And I am locked up for 6 months on all of these. But again, crypto is so hot. It's like brokerage firms are distribution machines. There was I'm saying it said you have to feed the ducks when they're quacking. Yeah. And the brokerage firms, the syndicate departments feed the ducks. Whatever the public will buy, they will package it up and sell it. The first deals to come out are the highest quality. Later, when it gets frothy, they can package up anything and the public will buy it. But we're nowhere near there yet. Kind of like this, it's a major signal, like more bears than bulls. Actually, bears expanded last week. The last 2 weeks in a row, bearish sentiment went up.
Yeah, crazy. So, gosh, we've covered a lot, Jim, but I want to give you a chance to kind of anything that we missed, because I mean, wow, we covered crypto, we covered a little bit of your hedging, the the cardinal sin of don't get shaken out of these leaders, like I have a number of times. You also let us know some of the things that we need to be aware of, the perfect storm, if you will, of, hey, things are not going the way that they should with a weak dollar,
That
gold,
could
the
happen.
30-year, so you've kind of given the warning scenario. And look, we've got a Fed meeting. It's not so much, I think, about the cut this time around. It's what is that posture? How does that press conference go? But yeah, your final thoughts, Jim.
The golden goose is working overtime to bring us the greatest investment opportunity in our life. The virtuous combination of unbelievable fundamentals and technicals and innovation, if all culminated to bring us the biggest opportunity of our life.
Hmm.
And I could be wrong. And if it is, and the market starts to break below the 50-day badly, I'll reverse or cool. But if you can't make money in this market, you should just never get involved. Okay. This is the biggest opportunity of my life. I've been in the market for 40
You know what?
years.
I'm going to correct you there, because there have been so many times where I have seen people mess up great opportunities. And I will say that one of the things that Bill O'Neill told those people not to, oh, give up, keep going, learn from your mistakes, don't give up, don't throw in the towel, fix it, because there's another one coming around the corner. That sense of optimism.
So I was on the phone with a couple hedge fund managers,
Yeah.
and a couple of them are struggling. And I said, just reduce your size, do not style drift,
Yeah.
do a post analysis of what you've been doing wrong. And you have to believe Can Slim works, that you're worth the profits that you're certainly going to make if you implement
Hmm.
properly,
Hmm.
and stay the course. Don't deviate, but shrink your size. This is the right market for Can Slim. This is a total Can Slim market. 2023, the initial bull phase was not.
Oh, I ruined
The
it.
indexes were ripping, but it was
Yeah.
not a Can Slim market.
I was
This is
so
a
frustrated in
golden Can
2023.
Slim minute.
I'm like, I should have just bought the S&P 500. What did I do? But yeah, no, you're right. This is a very different environment. Easy to mess up. They feel like they always are, but you have to, again, really look at what you're doing, having those rules, recognizing the opportunities, and again, that cardinal sin: don't get shaken out of your true market leaders.
Really quick, we didn't discuss Tesla. How did we not discuss
Oh,
Tesla?
geez. You know what? I think I mentioned it when we were talking about the mags. But yeah, I do have a position in Tesla. Yeah, this thing came out, and gosh, one of the things we were talking about here is, last week, with George Kachuk, about how it just, this tightening, kind of, right here, and that's a coil that's it's going to go one way or the other, and this one was to the upside, right?
So Eve, who runs my small fund, has been all over this thing. And she's like, look, volume's contracting, averagely trading range is contracting. You've got a multi-time frame pivot base. You've got Cybercab coming out. Elon's pay package has invigorated him. You've got the insider buy today. You've got Optimus, but there were so many false attempts.
Yeah.
And all of a sudden, last Thursday, or it started, and
Hmm.
it just blew out. This is the beginning. Okay, this looks like a big move. This is nothing. All right,
Hmm.
look at Elon's targets that he has to achieve and what's possible. Now pull up the monthly, please. All right. Being right early is wrong, but now is the right time. It's
Hmm.
and it's just started. I think there's a very good chance it runs to all-time highs, handles, and that how a handle, if we get a handle, unfolds will tell us the odds of a radically higher price. But I tend to believe that the market is starting to believe the fundamentals of Optimus, Cybercab, that it's better than Waymo, and that the bad earnings we are seeing are about to turn up.
Hmm. Yeah.
And this is a broadening. And by the way, lower interest rates are great for auto manufacturers.
Hmm. And for small caps, just to kind of,
Totally.
turn back to the small caps. So I guess maybe another thing here, um, I was starting to straddle a little bit, thinking, okay, maybe there's some rotation, maybe the Nasdaq takes a little breather, but again, it just seemed like AI and everything, all the old leaders just came right back. I was playing like the home builders, and that just didn't, they're just not catching on. But IWM, I do have exposure here. So should we be looking at some of this rotation as well, in addition to the leaders kind of still continuing?
It's just augmenting the bull. It's
Yeah.
augmenting the golden goose. I mean, look, you know what? If you guys have questions, I'm going to answer all your questions in detail this Wednesday. Use the coupon IBD, buy the bundle on the Roppel Report.
And
And
that's at www.roppelreport, two P's,
like
one
Barney
L.
Rubble,
Yeah, right. Yeah. And that's, yeah, roppelreport.com. And what was that promo code?
IBD. All the
Okay.
questions you have that you couldn't ask, you can ask me on Wednesday. I'll answer all of them. I will not leave until I'm finished. And I just posted last night's written report, which is 100 pages of ideas.
Right. I also want to mention that you're very active on X. You give a lot of great information on X, and that's at Uptickin. So a great follow there. Just so much that people can learn from. We got distracted, because we went to final thoughts, and then, oh my gosh, we forgot Tesla.
We had to talk about Tesla.
Yeah. So I'm glad you made sure that didn't go left out. But Jim, gosh, it's always a pleasure. Thank you so much for
Massive
doing
shout out
this.
to Allie. I want to say, Allie, miss you. Justin, you're doing a killer job. Thank you for bringing the best out of me. I love doing this, man. It really makes me happy to do it. I love doing it.
Yeah, and well, we love having you. And again, I think everyone benefits from the optimism that you bring to, well, pretty much everything you do. I don't think I've ever seen you attack something with like ho hum attitude, but
You mean like the dinner party in Vegas on the strip?
oh geez. Yeah, that's yeah, my wife is still recovering from that one. But
Everybody
always a pleasure.
signed up for the Vegas thing.
Oh yeah, so that's October 4th, the Founders Club.
Yeah,
I think.
everybody's got it. The lineup of guests is awesome.
Yeah,
Although I won't be there this year.
I know. Yeah, we're gonna miss you, but that's probably best. Keep us out of trouble.
Yeah.
I won't end up with a pink cowboy hat on this time around. So
I have pictures if anybody wants to see them.
yes, exactly.
All right.
Maybe you can feature that at the next Roppel Report. Okay. Anyway, Jim, always a pleasure, my friend. Thank you so much for being on the show. Really appreciate
Thank you.
it.
Have a great night.
Okay, that's going to wrap it up for us this monthly market report. We're going to be back next month to see how things are playing out and see if we can get any more bullishness from Jim. So again, go to the roppelreport.com, go to @uptickin on X, and tune in for this week. We've got a lot of great stuff. We've got Bill Bengen on the podcast, the creator of the 4% rule. We've got a swing trader webinar on Thursday, and then we've got an advanced buying strategy seminar on Saturday. So there's just plenty going on here. So thank you so much for joining. Really appreciate you guys sticking around with us when we were going through our technical difficulties. We will see you all next month. Thanks a bunch.